Welcome back to the exchange. Healthcare, the best performing sector last week, but it is having its worst three-year run in more than a decade. This according to Mizuho, up 2.5% compared to a 57% gain for the S&P 500. Managed care names like Cigna and Humana reporting this week, as well as large cap pharma, including Bristol Myers and Merck. Can strong earnings out of the names keep the positive momentum going? Joining us now, Umer Raffat, senior analyst at Evercore ISI. Umer, great to have you with us.
Thanks for having me.
And I'm wondering, with markets basically at record highs, Umer, does that serve healthcare well? Some of the big cap pharma and biotech names that you cover well, and that investors are looking for value. Are you starting to get the question, have we hit a bottom yet?
I think an overarching theme in the broader sector is there's a big unknown on what happens on MFN. That's the most favored nation drug pricing. We don't have clarity on that. And you can imagine that's so structural to the P&Ls and the earnings profiles of each of these companies. We need more clarity on the drug pricing. And candidly, at some level, a better rate environment would also help and go a long way. Lower rates. But in terms of MFN, there are certain, I'm sure, pharmaceutical companies that are hit more so than others. And combined with the patent cliff, it may not, the silver lining of a patent cliff is that you may not fall under that MFN because it's going generic anyway. So can you walk us through in terms of the impact on the names that you cover? Absolutely. I mean, I think the challenge is, which is, and I know you wanted to talk about the tariff stuff too. It's the same thing where a definitive policy framework's not out there on either of those aspects just yet. On the MFN perspective, we don't know if the scope will be limited just to Part B, which is sort of the expectation. Candidly, the investor expectation is it'll be just Part B, which is injectable drugs, and even within that, maybe a subset of it. Or would it extend to Part D, which is the outpatient drugs where the scope could be much more expansive, and whether that will spill over to commercial. I think those are the unknowns. And in the context of that, the generalist dollars have been hesitant to come in just because they can't handicap that.
Okay, but for the specialists, I'm sure the specialists can't really handicap that either, Umer. So where are we standing in terms of how you view value in this space? Because it sounds like if this is sort of the big unknown, and nobody can really handicap this, right, unless you're sitting inside the room in Washington, how do you approach the space?
Absolutely. I mean, I think as a starting point, everyone would agree that there's very good innovation in the biotech space. I mean, there really is. And for that reason, no one's looking to jinx that. And I think there are structural attributes at play which actually enable more investments going into innovation. The president welcomes it, and there's broader consensus on that. In that background, if there's some fine-tuning of price points for certain drugs, especially where government spend is high, perhaps in Part B setting, that might be more realistically possible. Clarity around that is what improves sort of the sector outlook, as I mentioned. But as it relates to practically what happens, as a specialist, I would say it's going to be limited to perhaps something along the lines of Part B setting, where you get slightly improved price points. And there might even be possibilities where going forward, the new launches are only held in US and there's not an ex-US comp, which may enable more price integrity. But again, investors just want clarity more so than anything else.